So, after almost an entire year of keeping us waiting, Chocolate Finance is now finally opening up their sign-ups again. And despite its return being now lowered to 4.2% per annum, Chocolate Finance is still giving better returns as compared to many other platforms out there, such as high-yield savings accounts, fixed deposits, and money market funds. So, I'll be doing an updated video to share everything you need to know about them. How does it work? How does it compare to its competitors? Is it actually safe? And who is this suitable for? Also, do join my 9,000 members Telegram chat group to discuss or ask any questions that you might have. Alright, here's a quick refresher on what Chocolate Finance is. It is a company founded by Walter Deode, who was the founder of Singlife. Yes, the same Singlife which back in the early days was also doing a similar thing where they were offering a 2.5% return while most other banks were giving a lower interest. The best part about Chocolate Finance is that the 4.2% return doesn't require you to fulfill any complex criteria. All you need to do is just deposit money in and you will start earning a daily return. Plus, there's no lock-in period and no additional fees. And I quote, "When your money is happy, you are happy too," which is super cheesy, yeah? But if it works, it works. Now, you might be wondering, what took them so long to finally open up? Didn't they start accepting sign-ups last year? So what happened was that back in 2023, they wanted to do an early beta phase to test out the product before fully releasing it to the public. And to do that, they partnered with Heavenport Investment Private Limited to do the launch. Then, over the past 6 months, they started working towards getting their own MAS license, which they finally did under the name of Chopfin Private Limited. And now, they are finally ready. Now, let's talk about the 4.2% return. How are they even able to give such high returns when almost everyone else is giving less than that? Is this real life?
Is this real life?
Okay, the most important thing you need to remember here is this is an investment and not a savings account, yeah? This means it's not capital guaranteed, there's no SDIC insurance, and the returns are not guaranteed. Basically, what I'm saying is with higher returns comes higher risks. Okay, but the risk is relatively low. Here's why. Currently, they are investing in short duration fixed income funds and money market funds, namely 40% in Dimensional Global Short-Term Investment Grade Fixed Income Fund, 25% in Fullerton Short-Term Interest Rate Fund, and the remaining 35% in UOB AM United SGD Fund. These funds invest in money market and short-term debt instruments issued by governments as well as investment-grade financial institutions across many different countries. And to lower the risk even further, any investments in global currencies are hedged back to SGD to protect against any FX risk. So currently, they are running a chocolate top-up program where you will enjoy a promotional rate of 4.2% per annum return for the first 20k, which means if the portfolio underperforms, they will top up to make up for the difference. Though, of course, this program will not last forever. Currently, it is scheduled to run to either 31st December 2024 or when the assets under management reaches $500 million, whichever comes first. Then, for amounts more than 20k, they have a 3.5% per annum target return. There's no top-up program here, so the returns here will depend on the performance of the portfolio. But here's a question. What happens if the portfolio does very well and delivers more than the target return? Will you earn a higher return? Yes, but only after Chocolate Finance has taken their cut of anywhere between 0 to 2%. What? Got fees one nah? I thought they said no fees? Of course got fees lah. Otherwise, Walter and the team eat what all? But they will only earn the fees if they manage to outperform the target return. For example, if the portfolio gave a 5% return but the target return is only 4.2%, in that case, you will only earn the target 4.2% return while they get the remaining 0.8% in fees. Or if the portfolio gave a 2% return while the target return is 5%, you will earn the full 2% while they will earn nothing. But what if the portfolio gave a 7.5% return while the target return is 5%? In that case, since the fee is capped at 2%, they will take up to 2%, leaving you with the remaining 5.5%. Naturally, some people might be wondering, if the portfolio earns less, I will earn less. But if the portfolio earns more, Chocolate Finance will charge up to 2% in fees. In that case, isn't it better for me to just copy the holdings and just invest myself? Can is can. But here are a few things you will need to take note of. One, currently, with the Chocolate Top-Up program, you will be able to earn a 4.2% return on your first 20k. I was rather curious about what the real performance of the portfolio was, so I went to Endowus to simulate it, and I found that this portfolio actually delivered an annualized 1-year return of 3.85%. So if you were to invest by yourself while the top-up program is still active, you will essentially be earning a lower return. Okay, then why not wait till the program is over, then switch over to Endowus? That way, you will get to earn more than the 3.5% return, right? Yes, that's definitely doable. But in return, you'll be giving up the convenience of someone managing your portfolio for you, plus the ability to withdraw your funds instantly. That's because the benefit of Chocolate Finance is that you'll be able to withdraw up to 20k immediately within any one given day, whereas Endowus requires you to wait anywhere between 3 to 5 business days to get back your money. Next, how does Chocolate Finance compare against other platforms? Check this out. For high interest accounts, even if you are able to fulfill the salary crediting criteria, credit card spend criteria, and increase your average daily balance criteria, the most you can earn is just 3.85% interest from OCBC 360. But of course, this isn't exactly a fair comparison since savings accounts have SDIC insurance and are risk-free, whereas Chocolate Finance is not. So let's compare it against other low-risk investment products instead. Here, you can see that the only ones that can give similar or higher returns are Endowus Cash Smart Ultra, Stashaway Simple Plus, and UOB AM Cash Plus Extra. However, their downsides are their returns are just projected returns, whereas Chocolate Finance returns are fixed at 4.2%. Plus, Chocolate Finance lets you withdraw up to 20k immediately, whereas the others require you to wait for a few days before you can get back your money. Wow, say Chocolate Finance until so good like that, what are the risks of investing in them then? First, as I mentioned earlier, this is an investment, so it's not capital guaranteed, the returns are not fixed, and it's not SDIC insured. So even though you can currently earn up to 4.2% return on Chocolate Finance, it's also possible to get negative returns when times are bad, when there's no chocolate top-up program. Second, Chocolate Finance can jibaboom and close shop. However, even if that happens, our funds would still be safe since MAS requires all clients' assets to be kept segregated from the company and held in a separate custodian account, which in this case are HSBC and State Street. And of course, as a licensed company, Chocolate Finance is subjected to regular checks by MAS to make sure they don't anyhow do funny stuff. However, if for some wild reason, Chocolate Finance suddenly closes shop just like that, and does not do any handover to another platform, clients may still need to wait a while before they can access a new platform and get back their money. So who is Chocolate Finance suitable for? I would say it is suitable if you're looking for a place to park your short to mid-term savings like your Thai fund money, wedding money, year-end holiday trip money, and if you're okay with all the risks that I mentioned earlier, then Chocolate Finance would be suitable for you, especially right now when they are offering a 4.2% return for up to 20k. Otherwise, if you are not okay with the risk, it's definitely way better to just park your money in savings accounts, government bonds, and fixed deposits and just call it a day. Anyway, that's all for this video. Hopefully, you found this useful. If you are interested in trying out Chocolate Finance for yourself, you can sign up using my link down below. Like, share, and subscribe as I'll be posting new videos every Monday, Wednesday, and Friday.